Hey, what's up, Claudia? Welcome to the podcast. I'm so happy to have you on it. Um, for people that don't know who you are, I would love to get your side of the story of how you became a Gator lender, but more importantly than that, I want to just get some of your background, like what you do, like what are some of your passions, and like what made you get into real estate lending.
Awesome. Yeah, so I'm originally from Venezuela and I moved to the US in 2001. Um, I honestly didn't know much English at the time, go through sort of the immigration shock. And in 2005, it was my mom's dream to buy a home. We've been paying rent, all along, all this time. And she needed my help to be a co-lender or like a co-signer
Hmm.
into buying that home. So we jumped in on it. I was 22 years old and we bought our first property back then. So that was 2005. If you remember correctly, the housing market crashed in 2008,
Yeah.
and 2010 is when we were faced with the need to sell the property
Hmm.
because both my sister and myself had graduated at the time, and
Hmm.
we needed to figure out what to do with the home. And at the time, I actually didn't know anything about, rental properties or real estate in general. We just wanted to be smart around how we manage our money. Instead of paying rent, we wanted to build equity.
Yeah.
But what surprised us is in 2010 when we were like, okay, how much are we going to sell the home for? We were going to lose money. And I was like,
Wow.
whoa, okay, that's not an option. We did, immigrant family,
Yeah.
we didn't have like the biggest savings or anything like that. So I'm an engineer by background, and I was
Oh.
trying to engineer my way out of this. And I said, well, why don't we just find our tenant who can pay our mortgage?
Uh-huh.
And that's what we did. And to this
Oh.
day, we still have this home,
Oh, wow.
which we have been able to do cash out refinance now that the market rebounded. And it's been a blessing for us. So yeah, that's kind of
Okay.
how I got into real estate.
Oh, okay.
Mhm.
So what kind of engineering do you do now?
Yeah, I'm a chemical engineer by
Oh, yeah.
trade, but now I'm more sort of like a manager, commercial
Uh-huh.
type engineer. I work in the oil and gas industry. I've been
Okay.
working that since 2008 when I graduated.
Oh, okay, gotcha. What are some of your passions? What do you do for fun?
Oh man, I love like numbers. So the part about real
Uh-huh.
estate that it's fascinating to me is kind of figuring out the return on investment. Is it a good deal? Not a good deal? Other passions aside from that is like family and
Uh-huh.
dancing, Latin
Okay.
blood. I love
Yeah.
dancing. But yeah.
Okay. So let's like kind of shift gears a little bit and just talk about a couple of deals that we end up doing together, actually. I know the first deal was a PM, well, both of them were basically PML deals.
Mhm.
Um, so why did you end up going the lending route versus like the Gator connecting or the
Mhm.
Gator wrestling route? Like what made you pick the lending route?
Yeah. So in general, so I mentioned I'm a mom of a couple boys, two under
Yeah.
two, and then I have a full-time job. So
Yeah.
I am into like it's fun for me real estate, but I needed something where I didn't need to be the operator. So
Hmm.
I cannot be fixing and flipping homes because
Yeah.
that takes a lot of time. So actually, I'm part of a community locally here in Houston, Texas,
Hmm.
and it's a lot of different investors who actually needed some transaction um, lending, so small amounts that the bank maybe might not give you. And that
Uh-huh.
was when I started dabbling in into lending. And the phone listens to you, so immediately as I started to do that, I started to get advertisement for Pace Morby's Gator method. And I jumped in on that because there was a lot of education behind it. And I needed to kind of learn a little more about how do you protect your money and all of
Yeah.
that. And that's kind of how I jump in into lending.
Okay. And did you know what Gator Connecting was or Gator Wrestling was at the time, or did you just wanted to just lend mostly?
No, back then I just wanted to. two things: gain understanding, so education, and then
Yeah.
to join a community that was bigger, so I could grow. So
Okay.
I always think of, if you want to head somewhere, you want to surround yourself with people who are already there. And
Yeah.
so that's kind of what caught my attention from the Gator community.
Okay.
And then it's been about 2 years. So I actually
Oh
joined
wow.
Gator when it was early on.
Yeah.
Mhm.
Okay. And I've been getting a lot of like questions, and I've been talking to a lot of folks, and they've been having, I guess, struggles on finding good leads or people to borrow with. How did you end up finding your leads, your deals, the ones that you lended on?
Mhm. So I would say, so one was my local community of
Yep.
investors. So you try to connect with people who are active in the flipping or kind of finding
Hmm.
wholesale deals, understanding where transactional money is going, whether
Yeah.
it is for double closing or escrow, EMDs, or fixing, like gap lending, fixing
Yeah.
a home and they don't have the money. So locally, I found a lot of that, and then in the community, if I see somebody who's actively asking, I like to set up Zoom meetings and try to meet with people. So how I connected with you, you actually did
Yeah.
a podcast with one of my mentors locally, and
Okay.
I noticed that you were in Gator, so we set up a Zoom call, if you
Yeah.
remember, and I've done that with
Yeah.
other people as well in the Gator community.
Yeah, yeah. And you're just looking at, so you're looking at your local community for leads, and you're looking at the Gator community for leads as well. So you're leveraging community in your network to find opportunities for you to make money,
Mm-hmm.
basically,
Yeah.
and be like a win-win situation, which is, I think a lot of folks may not be aware that they can leverage their community and
Mm-hmm.
their network to actually create a win-win situation, and you're doing it basically on a daily basis as a mother, so it's kind of like
I
there's no
wouldn't
excuse.
say, I do say daily basis, but I try. I try.
Yeah. um so as a lender, I know you've lent on a couple of deals already. Like, what kind of information do you look for when you are talking to a borrower? Like, what is like your process? What does it look like?
Yeah, so when usually like I said, I always like to meet the person, either face to face or via Zoom or, virtually, because you gain a lot of understanding on how the person is thinking through the deal,
Hmm.
and their experience. But usually I vet two different things. I vet the deal itself and then the
Okay.
person. So whether they've had experience doing the kind of work that they're doing, and then they can actually back it up with information, like they can send you the HUD statements and like here's the before and after photos. Also, let me think, whether it is credit score, identification, they're willing to provide information to you, and they're like, here's where I live, and
Yeah.
they're transparent, right? And you can tell that a lot with the communication, as well. And then once you vet the person and their experience, and it's not like I haven't thought through lending to people who haven't done this before, but if they're supported by people who've done it before, that's a
Mm.
different thing, and you're testing for that.
Yeah.
And then the other thing that you test is actually underwrite the deal itself. So do due diligence on how much they're buying the property. If it's a fix and flip, how much they're going to spend on the rehab. Show you the photos. Like if they say they're only going to paint it, but you look at it and you're like, oh, you need a new kitchen.
Yeah.
Do some of that. Send you the comps.
Yeah.
Just really underwrite the deal.
Yeah. Yeah. And do you, when let's say, I think the main part on this particular transaction between borrower and lender is like negotiations, right? If let's say the borrower doesn't offer you what you're looking for, do you try to negotiate with the borrower? If so, what do you negotiate on? Is it like return, or is it additional like late fees? Is it securities? What do you like to negotiate on?
So I think each deal is different,
Hmm.
right? And the more you understand a deal, then the more you, know how much room of profit there is in
Yep.
that deal, and then how much should the lender get versus the operator.
Yeah.
I call it in this case. So underwriting the deal and understanding how much fun there is in that deal, it's super important. I personally am big on securities, like understanding that I'm gonna get my money back, and then if I understand that there could be hiccups along the way.
Hmm.
So let's pre-negotiate late fees, because
Yeah.
that's one area that once you're in the heat of it, believe me, I've gone through it. You don't want to be negotiating after the fact.
Yeah.
So securities that you have, you're gonna get that money back, and if
Mhm.
it goes late, how much money you're gonna get because it's going late. That's kind of the biggest thing for me, honestly. And then
Yeah.
the return usually, again, if you understand how much fun it is in the deal, then you can maybe negotiate some of that as well. But
Sure.
I always number one securities.
Okay. And what kind of securities do you like to see a borrower offer you?
Yeah, so usually I like notarized kind of personal guarantees. I would like a JV agreement that states each our part, in this joint venture. Um, there is also a promissory note or a
Mhm.
mortgage document that states how they're going to pay back. And what else am I missing? So, deed in lieu is something that we have negotiated before, where if you're getting the second position and you want to make sure you get that property and kind of save it from foreclosure, if something was to happen. The late payments,
Yep.
you want to negotiate that as well. I think I'm missing something. Let me think. But those are the big ones.
Yeah, and then there's the last one we did was cross collateralization.
Yes. Yeah, thank you. So one of the things, actually, going back to vetting the deal and the
Yeah.
person, and making sure you're gonna get the money back, is financial statements. So
Yep.
understanding if the person is borrowing 100% of a particular deal. So you got to understand, okay, I'm getting money from let's say Harmony lender, and then you are actually using Gator money or private money to fill the gap. Then that house doesn't have any money to pay anybody back, right?
Yeah,
So
exactly.
then you go reach out for collateral, for people to secure your money.
Right, right. So yeah, th those are very good securities to offer. And then one thing that I would mention is that instead of a deed in lieu foreclosure, a substitute for that would be an to be put on the operating agreement. So that
Mhm.
way you can take charge and not have to go through the foreclosure process. I know deed in lieu foreclosure does do that, but sometimes it may not hold up or take a longer time to execute. So instead of that, you guys can definitely utilize a partnership agreement or an operating agreement to be placed on the LLC that will outline how you can take charge if one person doesn't perform.
Mhm. Mhm.
Uh, so um, for these other two deals that we end up doing together, what made you decide to go with these borrowers? Like,
Mhm.
give me your process because I know a lot of other Gator lenders or PML lenders may have the same type of reservation or they're
Mhm.
not fully committed because of maybe they don't know all the details. Like, what made you end up going with this borrower versus other borrowers?
Mhm. Yeah, that's a great question, because honestly, I've seen a lot of deals and I just
Yeah.
don't do all of them, obviously, but a lot of times it's just because of reservation. So I totally understand that from the people listening. What I would say, I go back to community. The very first two deals that I did, one was with a person that was locally within my team. I could go see the project and we could be in contact all the time. And the second one was through somebody who's done it before, in this case you,
Yeah.
and you could, one of the conversations we had together was, hey, have this person perform for you before? And this person not only have performed for you, but then you could show me, hey, here are all the deals that we've done together with this individual. And then this individual, again, betting the person, has performed and has paid on time. And then when there was a hiccup, they pay their late fees.
Yeah.
So that was like what gave me comfort, and again, community and partnering with people. So when you see a lending deal, you don't have to do it 100% yourself. You could put somebody else's eyes on it, and then that will help you vet the deal with somebody else who's in this world.
Yeah. The most one that we recently did with Julie, we both did our own vetting and underwriting basically because
Mm-hmm.
maybe I was out of pocket one day and then you were out of pocket, so we basically were going back and forth to basically double check each other, which was
Mm-hmm.
really cool.
Yeah,
because I missed some things and you got my back and then vice versa, which was amazing.
that's right.
What made you pick Julie? Because that person is definitely new to both of us.
Hmm.
I
Hmm.
got connected through a Gator through that,
Hmm.
a Gator connector. What made you decide to move forward with her?
Yeah.
Just out of curiosity.
Yeah, so with hair, so this is a good example of a person who doesn't have a lot of ton of history
Yeah,
doing flips, but the contractors that are doing the work have. And not only that, she provided comps in the area that were tangible and we can actually go back and vet the deal. So I think it was a little bit of when you look at a deal, a lot of times um, one of the most important things are at the price you're getting the deal and the rehab work. And in this case, I felt confident that the work was gonna get done without, you know, taking advantage of her, so to
yeah.
speak. Even that it was a crew that had experience, and it was a bunch of family related businesses. So I know there would be a bit of trust in the numbers more than just finding people on the
Yeah.
street.
You know what it is for me? It was the fact that the one that you ended up mentioning was a family. Like her contractor was her dad. So
Mm-hmm,
I'm like,
mm-hmm,
okay, great. That's
mm-hmm,
amazing to hear. Next was that I liked how open she was in providing all the documents that we were requesting, and then was always very communicative, and always would answer our response relatively quickly. And the fact that she was very open and sharing all of her previous projects without any hesitation, without any resistance,
mm-hmm,
and it really passed a lot of the feel good checks, right? Because we had probably two Zoom meetings with her, maybe three meetings, because the first one didn't fall through or didn't go through,
mm-hmm.
and it just like she just passed all the checks, and so and she was very very goal and like very motivated to achieve her goals, which was very like awesome as well. So that's like some of my reasons on why I
Yeah.
decided to go with her.
Mm-hmm.
And I felt like you kind of felt the same way, I'm assuming. Yeah.
Yeah, no, I liked how responsive she was. One of the
Yeah.
biggest thing is somebody has your money. You want to make sure they're answering the phone, they're answering the emails, they're providing all, ways of contacting them,
Yeah.
and that she was providing all of those.
Right, right. So the I've been talking to a lot of Gators too as well, and people are setting up their corporate credit and to be able to fund deals. And some people are maybe using their own credits, their own capital. How did you end up funding this deal? And this deal is only like $17,500.
Mm-hmm,
So it's not
mm-hmm.
a ton of money, guys, but it is a lot to some people and a little to some people. So for you, like, how did you end up funding this deal?
Yeah, so this particular deal, so I'll talk about this deal and then in
Yeah.
general how I think about it.
Yeah.
So one of the things I've been looking at is just like investment portfolios. So a lot of people might have their money on their savings accounts that are providing really not much of percentage of interest. And honestly, the inflation is eating you alive. So that's
Yeah.
actually when I started thinking about, okay, we should not have money there. And then the other pool of money in terms of our retirement, like 401ks or stock market, those are more volatile. And you ask yourself, okay, do I want to be in a volatile market or not for sure kind a space where I'm getting the return that I think I'm going to get and it's backed by real estate. So I wanted to diversify. And so with self-directed IRA money, this particular deal, I didn't do through that. I did more out of like, I've been moving some of my 401k out of stock market into real estate because it's performing better and it's backed by real estate.
Okay. So you leveraged your 401k to fund this deal. Did you
Mhm.
borrow against your 401k?
In this particular deal, I did have a borrow on my 401k provided like an 8%. So think about
Oh, okay.
like people who are getting lines of credit. It's like similar.
Yeah.
I pull a little bit of money out of my 401k, and
Okay.
this is providing more than that. So different pools of money that I've been kind of going
Yeah.
to.
And to give people context, we funded we did a joint venture fund of 35,000 with a joint venture return of 35% for the next 6 months. So yours is at 8% annually, right? I'm assuming.
Mm-hmm. Mm-hmm. Yeah.
So you're making an arbitrage on your
Yeah.
money
That's right.
of 25, no, 27%?
Yeah.
Yeah, 27%
Mm-hmm. Mm-hmm.
on a 6 month basis. So if you
Mm-hmm.
match that out to an annual basis, that's like a 54% return on your investment,
That's right.
basically.
Yeah.
So okay, that's great. That's how you used your funds. I used my Roth IRA as you saw in the email, and I get, obviously I don't have that arbitration, but mine's 100% tax free, but I can't touch it until 59.
Mm-hmm.
So it's more of
Mm-hmm.
like a retirement fund anyways.
Mm-hmm.
So that's great. So I didn't know how you funded the deal. Anyways, that's all news to me.
Yeah, yeah, no. I mean, it's interesting because every deal that you come across is not only vetting it, but asking yourself, okay, how am I gonna, can I jump on it, and how am I gonna jump on it with which funds?
Yeah. And we did use a TC, by the way, in this transaction. We're looking to use always TCs because, I mean, as your time is valuable, my time is valuable. TCs are great because they'll just do all the paperwork and do the coordination. And then as far as just to kind of pivot to mindset a little bit, because I know people that lend money, lenders may have a stop in their mind to like be very scared or very timid on the deal. Like, what was your mindset going into each of these deals as a lender?
Yeah, that's a very good question. I'll be honest, I think for
Yeah.
sure I was timid and a
Yeah.
bit scared as I was learning. So start small, I would say bite size.
Yeah.
um, and get comfortable with the paperwork, because again, the paperwork and the people that are actually using your money, it's what's backing up and giving you security.
Mhm.
So I would say the mindset that I have is making sure you're vetting the person, that you know them, and that you have the right paperwork in place, so you can actually start getting more comfortable and understand what would you do in certain situations if the money is late, for
Yeah.
example, as I talked about, and what would you do if it doesn't perform, that kind of stuff.
Yeah. And then when like the mindset, like how did you end up overcoming the timidness? I know you started small, but like, was there any like maybe books or any podcast or anybody to listen to get it over that?
Yeah, so I would say education for sure,
Uh-huh.
and community. So the
Okay.
education, that's why I signed up for Gator, and I wanted
Mhm.
to get educated. Education, kind of
Yeah.
listening to podcasts nonstop, understanding, what are other people's doing. I even talked to a local lawyer to understand the
Oh, okay.
paperwork a bit better. And
That's
then
great
the
advice.
community. Yeah, so I kind of went around and asked a few friends if they had any connections with a lawyer, and it was a quick kind of
Oh,
chat.
yeah.
But he gave me peace of mind, and I did
Mm,
kind of the checks that got me into getting more and more comfortable.
okay. Well, that's all great advice because I didn't do that. I didn't go through a lawyer. I just just get educated. But when you actually fund the deal and you're actually in the deal, like, was there any other mindset shift with your borrower? Were you anxious on getting paid back out on a timely manner? What was your mindset when you're in the deal?
When I'm in the deal, I
Yeah.
get anxious if the person doesn't respond. If I'm
Okay.
asking for updates and they're transparent, provide pictures or responding, right? Quick response. It's usually what kind of gives me peace of mind.
Hmm. Okay. So all the borrowers out there, just make sure you respond and communicate I would say at least a bi-weekly basis, if
Mm-hmm.
anything. Okay. And what kind of difficulties did you face in your early lending, I guess, career? Like, do you have any difficulties that come on the top of your mind that you were able to overcome? And I know the timidness and the attorneys, but is there anything else besides those things, or was that
Yeah, I
it?
would say so a lot of times the deals need an amount of money that you might not have. And
Yes.
so what you might hear in the Gator community as a connector, asking yourself, okay, maybe I don't have the full amount of money, but do I want to jump in and do Gator wrestles? So like doing a piece of that big ask. Actually, I like that not only because your bite is smaller, but you
Yeah.
actually are getting more eyes on the deal. I like that because of that. But also kind of I've been able to connect with people within my own personal circle outside of real estate that do want to put their money to work and becoming a connector in that way. Like, hey, I kind of want to do real estate. I don't really know a lot. Let me put the money to work and then show me how it works, but be
Yeah.
my manager on it. That's another way. That's another way that you can find the money. I would say
Mhm.
that's one of the things that when you see a deal and the number is kind of higher than what you have in your bank account, think about there is more money than just the kind of the money you have in your
Yeah.
bank account, and or you can do Gator Wrestle.
Yeah, that's a very good way to kind of put the difficulties of being a lender because maybe you want to lend a deal and it's a good return, but you don't have enough money, so that's why you leverage community like the Gator community, and you would get more eyes, like you end up saying, and that's so smart how you put it. And I know you've done a couple of deals already. Like, has there been a mindset shift after doing your first deal? Like, was there like an aha moment, like oh crap, I can actually do X, Y, and Z? Anything like that?
I would say the biggest aha moment is like I'm doing the most recent is the arbitrage on interest rates. It's like,
Uh-huh.
okay, wait a minute. I actually can not only like move money to a smarter outlet, but you can do a little bit of arbitrage, kind of whether it's a line of credit or a 401k borrow.
Yeah.
Again, you got to do your due diligence, but it pays.
There's another aha moment too for me as well when I was trying to find other ways in my head to leverage money. And I've invested into a whole life insurance policy, right? To where
Mm.
I can upfront load up the money that I need for the policy, and then I continue to front load it, but then I can borrow against it while having my money still work for me, the principal,
Hmm.
and just arbitrage the money, just like kind of like how you do it. So I think that's like a great way to start funding deals that way as
That's
well.
just I had no thought about that one. That's a good
Yeah.
one.
And also how you can fund it too as well. This is kind of like high level guys, but
Uh-huh.
if you fix and flip, I can, if depending on the hard money lender or depending on your private money lender, you can actually, my lender lends up 70% of the ARV. So let's say I buy a sweet deal at 40% of the ARV and he can lend up to 70%. I can take that 30% and put it into my whole life insurance policy and then borrow back against it. So that
Hmm.
way I can fund my whole life insurance policy while still renovating my
Wow.
property.
Yeah.
Yeah, it's a little
That's
high
awesome.
level.
See, I'm still learning.
Yeah,
It's a growth experience, honestly. And
it is.
the more you talk to
100%.
people and that are in it, then you're learning a lot more and more.
Yes. Um, well, I really do want to appreciate, I really appreciate you, Claudia, but I want to give, um, the kind of like towards the end of this podcast is like, what are some of the like takeaways that you would give to a new lender that's looking to start as a Gator lender or Gator wrestler? Like, what are some of your two or three takeaways? Maybe even one takeaway.
Community. You gotta connect with the people who are doing it. That
Okay.
would be if I had to summarize it to only one. That's
Yeah.
it, because they will find yourself a mentor who's done it before, and they will arm you with the tools that you need. And if I had to do two, then I would say education, right? So like education and community combined are the biggest tools.
Okay. And anything else? Just that's it. Education community.
I would say those are the biggest one.
Awesome. Um, and where can people find you, Claudia?
Yeah, so we recently launched a Instagram page at Casa Clart, CLART, Casa CASA.
Uh-huh.
You can reach out to me there or casaclart@gmail.com.
Okay, perfect. We'll have that in the show notes, guys, so don't worry about that if you guys didn't catch that. Any last words, Claudia, before we part ways?
Yeah, I guess I just thought about it. Like the
Yeah.
last thing is jump into action. It doesn't matter if it's small. Like if you do a gator wrestle and it's small, you're gonna learn by doing. So
Mhm.
you can listen to, I don't know, hundreds of thousands of hours of educational and talk to a ton of people. But until you do it, it's a different mindset, a different feeling. And you usually learn, not everything goes exactly as planned. So, um, those are the biggest learning opportunities as well.
Awesome. Well, thank you so much, Claudia, for being on the show. I really do appreciate that. Until next time, guys, I'll talk to you guys later. Bye.
Right.